Welcome
Great.
to the Impact Investing webinar series presented by OZ Pros and Crowdcreate. I'm Jimmy Atkinson, host of today's program. I'm the founder of Opportunity Zones database at opportunitydb.com, host of the Opportunity Zones podcast, and co-founder of OZ Pros. And I'm joined today by Will Walker of Crowdcreate, my partner Ashley Tison at OZ Pros, and two gentlemen from Hall Venture Partners. I'm here with Matt Van Dyke and David Kunz, and we're going to get to them very shortly. Before we officially begin, I just did want to go over some important notes for those in attendance today. Some answers to some frequently asked questions I'll hit at the top here right away. Yes, this episode is being recorded, and everybody who registered will receive access to the recording. We'll send that out tomorrow afternoon, so you can be on the lookout in your email inbox for the link to the recording tomorrow afternoon. The Hall Venture Partners does have a slide deck that they're going to be sharing with us today, and they have been gracious enough to make that slide deck available for download to everyone who registered. So I'll get that out in tomorrow's email as well. We are going to save time, hopefully about 15 or 20 minutes at the end of the presentation today for Q&A. So if you do have any questions for any of our panelists, please use the Q&A icon in your Zoom toolbar. We also have a chat feature that's used more informally for communication among the other attendees and the panelists. But if you have a question that you would like me to pose to our guests today, please do use the Q&A toolbar. It helps us cull the questions much more efficiently. And throughout the webinar today, I'll also be asking, I think we've got 2 or 3 poll questions queued up that I'm going to ask everyone to participate in. They're pretty painless and they are completely anonymous, so please answer them honestly. We'll get to our first poll question here in just a minute. But without further ado, I want to bring Will in one more time here and introduce himself. And then Will, maybe you can say a few words about our experts here today and then introduce them as well. So please tell us a little bit more about Crowdcreate and Hall Venture Partners and Hall Labs.
Okay, great, Jimmy. Thank you. Well, I just want to say Crowdcreate's really proud to work with Hall Ventures and Hall Labs, Hall Fund, that type of thing, as a sponsor of this series. And Crowdcreate, we have a database of over 45,000 accredited investors in our arsenal, and many in the institutional arena as well as the high net worth accredited arena. We can literally customize and put in the custom framework for any project or opportunity or company to reach what I call the right qualified eyeballs, and with the right strategic content, targeted PR, that type of thing, so that we really create a very speedy, targeted introduction to capital as well as other growth strategies. So we've been doing this for 6 years. I know OZ Pros has been a great partner of ours on the framing side and some of the legal side as well. And we really do pack a great 1-2 punch together, so to speak. But I just want to say personally, my 24 years, my background is private equity. I've been fortunate to raise a lot of capital, see a lot of deals, structure a lot of things. And in my 24 years experience, this is the top of the heap, talking about Hall Family Fund and Hall Family Labs and what they've created. When I was really interviewing them at first, working with Dave Kunz and Matt Van Dyke, who you're going to just meet in a minute, as soon as they told me about the numerous over 1,000 patents, the scope of their engineering group that they work with, and also the diversity that they are working with between operating businesses and real estate in their portfolio, and how long they've been doing it, since 1950. All of these things from my end, as a capital allocator and raiser myself for many years, spoke volumes. So this is really the top of the heap. I'm really excited to bring both Matt Van Dyke and Dave Kunz to everyone and hear their story and what they're doing and why they're moving the needle. Also, the magic wand is, they invest in both the GP and LP side and all of their projects and companies, and their exits are, I'll let them talk about it, but they've had numerous pre-revenue exits that are very, very successful. So this, as far as I'm concerned, is the holy grail, and I can't wait for everybody to meet them. So I'll be quiet now and pass it back to you, Jimmy, and we can get started with Matt and David and go from there.
Sure. Why don't we get an intro from Matt and David? Maybe they could each say hi real quick and introduce themselves. Matt, I'll let you go first there. You're on mute currently, but if you take yourself off mute, Matt, then you can say hello to everyone.
Yeah, great. So hello, everyone. My name is Matt Van Dyke, and I'm the CFO for Hall Venture Partners, as well as the Hall Family Office, which is referred to as Hall Labs. I've been with the company for around 8.5 years now, and have a focus in my prior life in tax. And so really the culmination of the innovation and tax is what's become interesting, at least in this opportunity zone space. And so that's me. I'll let Dave go from here.
Yeah, go ahead, Dave.
Great. Thanks, guys. I appreciate everyone having the opportunity to put this together and to bring us in to present. My background is on as an investor, as an operator in both early stage and growth stage companies. I've worked on both the public and the private side, and was fortunate enough to get introduced to the Hall family and Hall Labs almost 2 years ago now. And having that outside third party viewpoint when I had an opportunity to visit and subsequently meet the people behind Hall Labs itself, I was blown away. I've seen many incubators throughout the country, many accelerators throughout the country, and this is just something that is totally unique and different. They've realized what they're really good at, which is innovation, and innovation within technology and product that really has a hard time getting growth within large companies. That innovation needs to happen where it does within the lab here. And the Hall family has been the only LP up to date in these companies, which has helped them grow. And those companies themselves, they pivot, they change, but they're very, very strong in creating intellectual property with over 1,000 IP licenses and in building those companies. And when I came in, there were about 20 companies that needed growth capital. And we realized that there was an opportunity here to build the same formula of success that's worked well over the last 50 plus years with that next stage and iteration of company growth, which is that venture growth space. So alongside Matt and two other partners, we were able to identify criteria to select what we thought were some of those top companies within the Hall Labs campus, and excited to talk to you about some of those today. And really, we'd like to say it was foresight, but the reality is we were a little lucky in the fact that our entire campus got included within an opportunity zone as well. So I think one of the benefits of what we have is we were building this fund anyway, and we ended up finding after the fact that we were able to offer the incentives that follow along with the OZ platform. So we're excited. Thanks.
Fantastic. Thank you, Dave. Thank you, Matt. Matt, I'm going to let you share your screen in just a minute, and we're going to learn a lot today from these two gentlemen. We're going to learn some family office strategies for opportunity zone investing, the diversification and ROI benefits of venture investing, specifically within opportunity zones. This is not just another real estate play. Not that there's anything wrong with real estate, but I always love hearing from people who are doing venture investing. And of course, we'll also hear about the impact potential, social impact potential of tech firms located in opportunity zones, and specifically the impact that Hall Labs is having on the Provo area. Before we turn it over to Matt, I do want to flash up our first poll question today for the audience to participate in. A live poll question here, and it is completely anonymous, so please do be honest with your answers. It'd be great if we can get a lot of participants today. We want to know, have you made an opportunity zone investment? And if you have, what kind? We've got real estate, single asset or multi-asset. And if you've invested in operating business, that's another option, either single or multi. And maybe you've done a combination of both real estate and operating business. And maybe you haven't invested yet, but you're thinking about it, and then you can just vote not yet. So we'll leave this open for a few more seconds here. We've got a lot of people still participating, reading through the choices. Matt, if you want to go ahead and start sharing your screen, make sure that works while we finish waiting on these poll results to come in.
And, you know, Jimmy, I got to chime in here that for those that are thinking about it, man, we got to get them off the fence. You got to stop talking about it and do it.
Yeah, well, they've got a little bit of time left. Probably a year-end deadline for most of the investors in this room right now. So I'm going to go ahead and end the poll here and share the results while we wait on, I think Matt's almost queued up there. So I'll share the results here. So the majority of you have not yet invested in an opportunity zone, which is good and bad, I guess. It's bad because what are you waiting for? But it's good because you're here and you're learning more now, and you do have time still to put your capital gains to use. Most likely, the vast majority of people who have capital gains or recognized a capital gain recently may have until the end of this year. If you have any questions about that, please feel free to shoot them over to me in the chat.
Don't wait until December 27th because the IRS shut down the EIN, the login last year. So don't be waiting until the end of the year again. Call early.
On the government.
That's a good
Well,
point.
Jimmy,
actually.
the nice thing is here is, you know, because Matt has the tax background that he has, you know, this all came out of Matt solving capital gains issue for the family office itself. So we've helped a number of family offices and high net worths be able to create their own vehicles or invest in our vehicle, and he's been an amazing resource.
Fantastic. Yeah, that's great. And we're looking forward to hearing from him. And then of those of you who did, 38% of you have invested in Opportunity Zone Fund, which is fantastic. Most of you are in real estate, it looks like, but a handful doing some operating business investing as well. So you're going to learn a lot more about venture investing here today. So without further ado, Matt, please take it away.
Great. Well, thank you. So hopefully everybody can see the screen.
We can. Yeah, it looks good, Matt.
Perfect. So just as a quick overview, great intros. I think that you guys probably did a better job than what I can as far as explaining what we do. But the way that we're organized is that we have kind of three different segments. So the first segment's Hall Family, and we often refer to that as Hall Labs. We have a 60-year plus track record as far as creating technology, and have had quite a few exits over the past even 20 years. Been able to return quite a bit of capital off to investors, and typically those investments and those technology creations have happened at an earlier stage. And so we've had various pre-revenue companies that have sold at a $100 million plus value, and we've also had some operating companies that have sold off to strategic.
Hey, Matt. Sorry to interrupt you, but it looks like some people are having a difficult time reading it. I don't know if you can expand it on your screen there, but if you can, that'd be helpful.
I don't know if that helps any.
That does help a little bit.
It does. Yeah, it's clear.
And just to reiterate, we are going to be sending a copy of this slide deck to everybody tomorrow if you need to review it further. So,
okay. Thank you. Hopefully that helps.
Please continue.
So after various years of doing early stage development, we realized that there was quite a bit of value that happens to the companies once they reach commercialization and get pushed off into more of a growth trajectory. And we'd explored different ways. Typically our methodology was just to either sell it to a strategic partner that could scale the technology, or we would partner with that strategic for a period of time, and then they would typically end up buying it. Also did individual deals with private equity companies in the past. And since we had a large number of companies that were growing, we decided to create a venture fund that would be managed by a group of individuals that had had a group of individuals that had quite a bit of experience in growing companies. And so we created Hall Venture Partners, and Dave, my partner here in Hall Venture Partners, is part of that alongside two other partners. Is the first investment vehicle that we have as part of that Hall Venture Partners is the Opportunity Fund 1. And David mentioned this in the past. We were already creating the fund. I ended up getting a notification from the city of Provo saying that we fell within an opportunity zone. And I had a background in tax, and we had a problem that we needed to solve. We had some capital gains that are rolling off from some of our past exits. And it made a lot of sense for us to be able to create the fund as an opportunity zone fund. So a quick look at our background. Again, we have a 60-year track record, and it really started back in the 50s. The dad, whose name is Tracy Hall, he invented man-made diamond, and he did that while at General Electric.
Oh.
And he left General Electric, came down to Provo, Utah, and was a professor at BYU. And BYU couldn't pay him very much at the time, and so he ended up creating a couple of side hustles. They had allowed him to be able to take his IP and created different companies while he was a professor. And he did that with his son, David Hall, who's one of our partners here. And our first exit, or our first commercial exit, happened in the mid-'80s with Mega Diamond. And then from then, it just cascaded into different companies that we had created and then we had sold. And one important thing to note as far as Tracy goes, Tracy was a big studier of Thomas Edison. And the reason why I went to Edison Labs or General Electric at the time was because he wanted to work there at some point. And so everything that we do within the lab itself is patterned after the concepts of Thomas Edison. And we often refer to Hall Labs as a modern day Edison lab. We spent quite a bit of time in the industrial space when it comes to diamond as well as downhole tools for oil and gas. But we expanded beyond that really in the 2000s and really determined that our core competency was being able to take multi-disciplines from an engineering and science perspective and attacking big problems, not only just in energy or industrials, but really big worldwide problems. This is a quick look at our historical return of capital. To be honest with you, before creating the fund itself, we didn't look too much at what our historical returns have been, because the methodology that we followed was once we sell a technology, let's take that money back and deploy it back into new things that we can create. And that's really the internal driver here, is really to be able to create things and companies that can have an impact, throughout the globe from a technology standpoint. But as I looked back historically and really saw how we did, we did end up returning quite a bit of capital back to investors and also into Hall Labs and where they could redeploy that capital. So that gives you a high level view of our historical returns. So I'll let Dave chime in to explain where we're at today.
So thanks, Matt. I think, some of the key factors that have led to the success of and the process that's been created with Hall is, you can see on that sheet, and if you can't see, I apologize, but you'll be able to look at it at a later point, that the overall portfolio has averaged about a 5.4x return on invested capital, and that's just within Hall Labs. And then as we've brought in a co-investor at that point of needing growth capital and having that commercialized product, that co-investment average and rate of return average goes up to 7.9x. So although we're thrilled to have the opportunity zone incentives, I think we're very happy to show people that the success, the track record, the process has worked throughout history, and I think puts Hall Labs in the top quartile for any growth venture fund. But thankfully, we have the opportunity and the vehicle to offer the incentive alongside of this as well. So in terms of Hall Labs, where we stand today, the fund itself, we've been able to make five investments within companies, and have another 3 targeted for Fund 1, and plan on closing that out here by the end of the year. So I think the timing's great for all of us to be able to answer any questions that you might have, talk about venture itself and how it fits into your portfolio. And more specifically, I think most people that I've spoken with had realized and seen the opportunity zone investment opportunities within real estate, and were many times not aware that venture qualified. And being that we're a family office that has done this, we're doing it as much, for ourselves as we are for our LPs. And that's why it was so important for us to invest as an LP within this fund.
Great, thank you. So really briefly, if you look at the methodology, the way that we think about the investments, there's early stage investments and there's later stage investments. And on the Hall Labs end, we typically have not partnered with others from an equity standpoint until the company has proven itself or the technology has proven itself in the market. And usually when that has happened in the past, we ended up selling that company outright. And you'll see on this chart all these different exits that we've had. And this is essentially showing what stage of commercialization that they were at exit. And on the left-hand side of this chart, you'll see that Hall Labs focuses really on the early stage items that are kind of entering into beta testing or even early sales. And the fund's focus is really on the companies that have kind of risen to the top. And that's when you can apply, I'd say, traditional business thinking to the businesses, to the technology that isn't innovation, I'd say. There's, I call it block and tackling professional type of services that you'd apply to these companies in order to exhibit growth and partnerships with others that can fill out your distribution sales channels. So Dave, do you want to touch a little bit about the campus where we're at in Provo? I live here. So it's a little bit. It's not that exciting for me just because I've seen it as I grow up. But maybe Dave, you can give an outside perspective on it.
Yeah. So they're about 45 minutes away from Salt Lake, and the interesting part about the campus itself is also the property. The property is an area where it used to be the largest employer of anyone within the area, and it's a former steel mill. So one of the important things to the Hall family itself was not only to create this incubator and this campus where they're building innovative companies, but on top of that, tackle the brownfield that was created and be able to bring that back to usable property. And that's exactly what they've done. So today, it's about 130 acre contiguous campus, and a testament to, the companies that were created even back in the 50s. They're still there today. So there's almost 700 people on campus, about 200 plus engineers in every vertical. And, that's, to me was really what was impressive is, going in and seeing exited companies to the likes of Schlumberger and Caterpillar and NOV for some of those early stage diamond companies. And that technology that had been built then is still relevant today. So being heavy on the patent side and building that patented moat allows them to be very open with prospective LPs and investors. And so, we've encouraged as many people as possible to come to campus to take a look at what we've been able to build, but understand today that that's not as possible as it has been in the past. So we've tried to create some assets to help show people, which I think Jimmy can share afterwards, really what's happening on a local level there at Hall Labs.
And Dave, I just want to jump in there too. We're putting together some incredible aerial shots. They also have a lot of very impressive footage from drone footage and on to really give you the in-campus experience that's really extraordinary. And we're helping them put that together or leveraging what they already have here at Crowdcreate, which is some of the things that we do. So I want to make sure everybody gets to see it, whether through Jimmy or through OZ Pros or through us at Crowdcreate. We'd love to have you guys take a virtual tour of what we're putting together, what's been put together. It's incredible.
And yeah, we'll send along some of those assets tomorrow afternoon. along with links to the video recording and the slide deck as well. Hey, a question for Matt and Dave from me here. Is this entire campus located within an opportunity zone? Is there any part of it that's not, or is it all OZ land?
The entire campus is located within an OZ.
Yeah, fantastic. And do you, how close are you to BYU here? And do you have any relationship with them?
Yeah, so we typically will do work with BYU on a company by company basis, but BYU is about 10 minutes away.
Oh, that's great.
Another major university, UVU, that's within about 15 minutes. So a lot of young students. We have a lot of internships that come through here, and they provide a tremendous amount of value.
Fantastic. And I think if you look at the backdrop of actually what's happening within the Provo and Greater Salt Lake City area, it's been a hub for innovation and growth. A lot of M&A has been happening there within the last couple of years, whether it's Qualtrics or Purple, and there's a reason for that. And the reason is access to great talent out of those two universities that Matt just mentioned, whether it's on the the technical side in engineering, or whether it's on the sales side. And it's actually been coined Silicon Slopes. So we've even found companies moving out of Silicon Valley to come to the Salt Lake City area because it is so business friendly. And then on top of that, when you add the OZ benefits, it really has been highlighted as one of the top areas to build a business.
So one thing just to note really quick on opportunity zones, and this is some of the difficulty. I'm going to put on my nerdy tax hat here for a sec, but as we were looking at this and we're looking at the legislation that came across, that there's a reason why a lot of companies and a lot of funds are focused on real estate, right? The legislation says you need to deploy capital to benefit a specific tract of land. And the easy thing about real estate is it doesn't move, right? So you'll know that as you put money into that the expansion, the economic benefit's going to be really secluded to that area. The cool thing and the unique thing about businesses is that they grow and they move and they expand and they contract. And it made it a little bit more difficult to fit within the opportunity zone legislation and clarifications that they've given out. And as we approach this, we really had to look at it 10 years from now. And as part of that looking out, we had to say, okay, do we have enough space? And is there enough room for expansion of these businesses to check the box on all the requirements of the IRS for qualified opportunity zone businesses? And the important thing about this was mentioned is that we have around 130 acres of expansion land that's currently under contract to be all developed. And so as capital is deployed from the fund into these businesses, those businesses stay on campus, and that's what helps keep those opportunity zone classifications or qualifications in line for the holding period of the fund. Sorry, I went on a tangent there.
That's okay.
Dave, do you want to talk about the management team a little bit here?
Yeah. So as far as the partners that are included on the GP side, David Hall is Tracy Hall's son, is currently the principal of Hall Labs and one of the general partners within Hall Venture One. David's love and passion is the lab. He's there every day. He's in the lab. He's part of helping drive the innovation there. Myself and Derek Weber have known each other for about 6 years, dealing with each other on, both, the M&A front, as well as investment banking. So he and I have a long history together, working on growing companies, as well as helping those companies exit. And, as you've heard from Matt, he really ties it all together, being that he's the tax expert that sits on both sides of the fence and really helps drive the business at Hall and at HPP. And we've been sure to put in place a number of parts of criteria to help ensure the fact that all these businesses meet specific investment criteria that we have. And we've worked with third parties to help develop that as well, that we're happy to share with you too.
Great. And just as a side note, if you look at, again, early stage companies are going to be hairy, meaning that they're going to pivot a lot. They're going to change directions. They're going to figure out who they are or who they want to be when they grow up. And we really feel like that's the place where they operate best and freely within a lab. Having too many shareholders at that stage of business is difficult because you have to create a board presentation or a PowerPoint presentation every time you want to change. Once those companies really have figured out a product and a direction, have received market feedback, and they're ready for growth, that's when the fund comes in. And so wanted to share a video of one of our portfolio companies that we've deployed capital into. So hopefully this will work because it's a video. So we'll expand that.
The best part about driving fast is that you arrive at the destination.
It's a little choppy, Matt. We may want to include that in the follow-up.
Ever since I was a kid, I always wanted to create my own vehicle. I always a vintage car in a new platform.
Hey Matt, sorry, I cut that off because it wasn't working too smoothly there.
Yeah, we can share that video as it goes around. I think it's just a function of the video itself not being able to be shared through a screen share.
Yeah, well, let's we'll send that tomorrow. It's a really impressive video about the electric car company that you guys are backing. Is that correct?
Yeah, so we've built a company called Vanderhall. Vanderhall was a project of Stephen Hall, and all of a number of the children of David Hall are involved in Hall Labs. But one of the biggest things that's important to him was that they all went out to industry first, and they all had to go out to industry and prove their own and find their own way. And Stephen was always interested in cars and was a owner of a dealership, but he essentially built this out of his garage. And he realized that there was an opportunity for a three-wheel car that fell underneath the criteria of a motorcycle because it was a little easier to get that approved. And then on top of that, have something that really looked and felt like a throwback vehicle with all the benefits of modern technology. And they're incredible to drive. It's got this kind of almost look of a roadster or a Porsche, but at the same time the acceleration and the feel of a motorcycle. So the exciting part there is that we've been doing a lot of distribution through Harley and Indian dealers, and as some of the baby boomers have grown up, whether they're it's balance or they don't feel comfortable behind their motorcycle anymore, they've been able to find the same excitement behind the wheel of a Vanderhall. And we today have about 8 different options within that category, but are growing Vanderhall to be not only a three-wheel car vehicle, but a platform for power sports. So new vehicles to come in a very short time. And that's probably one of the companies that's the farthest along on the growth cycle for us. And surprisingly, even through COVID here, has had year-over-year growth, which has been really exciting.
Hey, Dave, that was featured on Jay Leno's Garage once or twice, right? Tell us Matt, tell us about that just quickly.
Yeah, well, I'll let Matt highlight that because he was involved with it. But yeah, we've been on Jay Leno's Garage twice, and he's a big fan.
Yeah, sorry, it took me a while to figure out that the video wasn't working. So apologize for that. But yeah, Vanderhall's seen significant growth. They have 2 episodes right now on Jay Leno's Garage, one on the gas model that I was trying to show, the other one, the all electric that was just released, the Edison, which now you get the name behind the Edison, which is the new model that was released for all electric. And we'll have some exciting news coming out, hopefully in the next 30 days for new offerings as well. So we're really excited about Vanderhall as well as the other portfolio companies that we've invested in.
Yeah, that's excellent. Apologies that the video kind of glitched out there. Everybody who registered for this webinar, tomorrow morning is going to be like Christmas. We're going to give you links to the slide deck, recording of this video, and I'll make sure to include a link to that Vanderhall video that Matt was trying to share. Matt, I'm going to have you share your screen again so you can run through the rest of your slide deck. But before I turn it over to you, okay, good. You got it up there. Before I turn it over to you, I want to launch our second poll question for our audience today. This is one, if you've been on any of my webinars in the past, this one will look familiar because I ask this one on almost all of them, but I like to get as much data on this as possible. And it does vary by the webinar that I do. So which of the following best describes your primary motivation as an opportunity zone investor? ROI, social impact, or tax incentives? So again, this is 100% anonymous. So feel free to answer honestly, and we'll just give everybody a few more seconds to chime in.
While they're answering, Jimmy, I got a question for Matt.
Yeah.
Matt, do you make those in a version that'll accommodate a 6'8" guy?
Hey, yes. So overall, I know that Shaquille O'Neal has one. We had to make some modifications for him.
Sweet.
But I'm 6'5", and I fit really well. So I think you'll at least be close. So I bought one myself.
Fantastic. Well, you got the whole Dino thing going there, right? Because your head can kind of stick out of the thing. So
yeah, exactly.
I guess it's all about the legs at that point.
Shaquille's feet, I think, are 6'8", or at least in length, if you want to measure them. A friend of mine did his shoes and built a big floor lamp out of one of his old shoes with him. So if it works for him, it can work for anybody.
There we go.
That's fantastic. So fairly even split here on my poll results here. The plurality of you are in it for the ROI, but 30% each for the social impact component and for the tax incentives as well. So that's fantastic. Matt.
And Jimmy, I think the one thing that's interesting about that poll question is, at the end of the day, none of these things make sense unless it's a sound investment. So, what we had really focused on was ensuring the fact that, it's people and process and it's execution. And, you have a history of that here with Hall. And, the last piece being alignment. So if you're not investing in a good quality company, then the incentive structure doesn't make sense at all.
Absolutely.
So, and that's, we've been heavy pushing the process around Hall because we want people to understand that that's a systematic approach to exits that have worked.
Absolutely. Well,
that's why the exits you've had have been so successful and happened fairly quickly as well compared to other private deals.
We typically look at a time horizon of about 3 to 5 years. So
that's excellent.
And that fits well within the structure. It also allows us to redeploy capital as well.
Very good. Well, Matt, do you want to continue with the presentation here? And then let's, I think we'll probably have time for about 10 or 15 minutes of questions at the end, which would be great.
Okay. Yeah. So real quick, these are our current investments that we've made. Vanderhall, we've already spoken about. Medic is a toilet that collects medical information. So it's essentially going to the doctor's office every time that you go to the bathroom. We can capture big data at that point and be able to determine whether or not you're going to have a chronic disease. Smarter home is motorization, intelligent motorization within the home. Bacon is a replacement for temp agencies. It's one of our only software-only plays. And Surefy is innovating the building automation space by replacing all the wiring that needs to go within large commercial spaces. They're able to do that wirelessly. So those are the 5 investments that we've made. And since we've made an investment in each one of those, they've actually performed very well. Bacon was our first one that was done kind of mid-year last year. and they're seeing astounding growth, and it's been very, very encouraging and very exciting to see them grow. And the unique thing, I guess, about it is again, if you look at this as an opportunity zone investment in our campus, we're able to interact with these companies on a daily basis, and we're able to get great visibility into how they're actually doing, rather than going to a typical board meeting once a quarter. So let's see if we can get through here. These are the basic terms. We'll send you off the deck. I don't know that it's necessary to go over that. And then as Dave mentioned, there's specific criteria, conflicts measures that we put in place to make sure that we protect LPs within the fund. And I think I want to make sure that we leave enough time for Q&A. But I'll go back to Dave to see if he had anything else that he felt was critical to discuss at this point.
No, I just thanks, Matt, and I want to thank Jimmy and Ashley and Will for putting this together, and would love to be able to open it up for questions for individuals as they whether it's looking at individual portfolio companies, and I think that's the last piece that I'll leave people with. It makes us unique is, typical investment within a venture fund, you're investing in process, but we're actually giving our LPs and investors visibility down to the individual company level. So, and I think that's important because we want people to see where their money's going to work, the sustainability around that, the job creation that's there, and a number of other criteria from climate and water that a lot of these investments are making within kind of those 17 SDGs.
Hey, David, real quick question just for me. I know we want to get to it, but you or Matt, you really concentrate on the social part too, as far as clean air and different initiatives like you just touched on. So maybe you could just, explain or just touch on that a little bit of what criteria really goes into all of the projects you choose, because they do have social impact. It's profitable and it's great, and early exits and all the money you guys put in and it is all great, but it's also really what the theme of this whole webinar series is about. So
yeah, if I can add to that question, as Will just mentioned, this is the Impact Investing webinar series. We like to highlight funds that are really doing it right in terms of impact, and Hall Labs, you guys are far too modest. I want to hear more about not only the social impact that you're having in Provo with the economic revitalization you're doing in the opportunity zone areas of Provo, but also maybe you can speak a little bit more about the environmental impact that Will was hinting at there as well.
Yeah, Matt, I'm happy to take that, or you can.
I'll go ahead. I'll do it. So overall, if you look at different ways to impact things, there's the environmental side of that, and you can look down into the land, right, that we sit on. It's an old steel mill. It's not the best piece of property in the world, and we're doing quite a bit of reclamation here within the site itself to make it usable again. So there's just on the ground that we sit on, there's quite a bit of reclamation there. The jobs that we add within the valley has been great. You're adding very high value, high paid jobs within the area. On the technology side, we're adding manufacturing jobs. So it really goes from blue collar to white collar, as we have the manufacturing of the Vanderhalls happen here on site. And then outside of that, the companies themselves all have independent direction, right, that they're going toward. So if you look at Vanderhall, for example, power sports are very pollution heavy. They don't follow the same restrictions that automobiles do. And we're trying to make an impact on that for Vanderhall. I'll pick another one, Medic. Medic is really trying to improve the lives of everyone. They're looking at chronic diseases, and they're looking at ways to stop all of the hospitalizations that happen within care centers. I think more than half of the hospitals.
70% of chronic disease can be solved with predictive analytics. And the idea with that is to, help use AI, machine learning, and data sets that are out there to predict what's happening within a human's body.
Right. If you just kind of sit on that thought for a while for a toilet, why a toilet, to gather that information, it's something that everybody does. Everybody has to do it. You can't avoid going to the bathroom. I have kids that try it and it doesn't work.
Pun definitely intended there about sit on that, right?
Puns. I don't even realize it. Yeah, but if you think about it, it's an activity that happens every day. You don't want it to be out of the ordinary. And because it happens multiple times a day and it's a normal human occurrence, we can capture that information every time. And if you can use the analysis off of those data points, you're really able to tell a person what direction they're going. Rather than showing up to the doctor's office once every year if you're good, once every 4 years if you're me, right? Or going in when things have just gotten too bad. And you're really trying to figure out those trends so that they can change their behaviors to improve their lives. So those are just a couple of quick examples on that. And some of the earlier stage things that we're doing within the lab are focused in on the decentralization of utilities, whether that goes to wastewater, to clean water, as well as into energy and the creation of energy and making that carbon footprint be zero. So all of our businesses have an impact jive to them. And the reason for that is because we're trying to solve big problems. And you draw that back into, okay, how does this work financially? Big problems typically have a good rate of return. And big problems within the globe are going to be able to return dollars back to the individuals. You just have to be able to apply the right science and engineering into those problems and push them forward, not necessarily in a university type of mindset.
Fantastic. I do want to move on to the Q&As that we have from our attendees, but first let's get our final poll question up on the screen here. We're going to do this one real quickly here. I'm going to allow panelists to vote too. Okay. So are you planning on making an opportunity zone investment within the next 6 months? Yes or no? And Matt, you might want to turn the screen share off so we can see our faces all that much better. Fantastic. Thank you. So we'll just give everybody, a few minutes to think about that one, answer that one. And I'll dive into the questions here from some of our audience members. Quite a few questions on how the fund is structured and how you have the exit structured. This question is posed this way. How is your OZ fund structured? Is it your intent to sell companies and end the fund after 10 years? Or are you going to continue to invest through the fund with different opportunities until 2047, which is the sunset date of the OZ provision?
I'll let Matt dive into the details of structure, but I would say, the history of Hall Labs, as we've touched on, has gone back 60 years. And this is the next iteration of where we see the potential for growth. And we, are strong believers that there are large problems and large issues within the world that need to be tackled. And that has really been the intent of Hall from day one, that, find big problems that can't be solved within large corporations and build intellectual property around that, and then companies to help serve those goals. And so I would say, fund 1, fund 2, fund 3 are, probably on the heels of this. But as far as investing in companies, Hall will continue to do what it does best, which is innovate.
Matt, anything else to add to that, how the fund is structured exactly? And, a follow-up question from Sanjay, kind of along these same lines. He asks, I think you mentioned that, in 3 to 5 years you exit. How do investors keep their funds in for 10 years to maximize the tax incentives? He's confused between the OZ part of the fund and investing in high-tech companies, which are part of the fund. So how does that all work if you're moving in and out of different companies? At the investor level, how do they achieve the benefit? You're the tax guy here, so walk us through how it's structured. Walk us through how that works. So we got a few questions about that topic.
A couple of things. I think if you look at exiting real estate, it's illiquid, but it is liquid at the same time. You'll find somebody buy it at the right price, within a specified time period. Companies are a little bit hairy, right? When it comes to being able to exit those companies, oftentimes it's opportunistic when you have to say, okay, somebody's going to offer us 10x off our investment, and we really feel like we should take some chips off the table at this time. And really what drives us are the economics to begin with. And then the taxes we structure around to make it so that we can optimize. And if you look at that exit horizon of 3 to 5 years, we've oftentimes held companies for longer, well beyond that, into the 10 to 15 year time frame. The way that we're structured is that once the fund invests in the company, the companies are predominantly 1202 companies, which means that we receive a tax benefit even after 5 years of investment. So if we exit a company, we put $5 million into a company and we exit it within 6 years, which is well within the 10-year hold period, we still get capital gain appreciation on that investment from the fund level, and that capital gain exclusion trickles down to the investor. So we've kind of folded in both opportunity zone investment benefits as well as Section 1202 investment benefits on most of these companies. But if we do exit a company that is within, let's say, 3 years, that capital gets returned back to the fund, and the fund has a year to deploy that capital back into opportunity zone assets. And within that year, if they deploy that back in, then you fit the 90% rule that the government's set up to say, hey, 90% of your assets on the fund side have to be deployed into a company or a qualified opportunity zone business asset. And once those funds come in, we realize that each LP has their own individual needs. Some LPs might say, you know what, I really want to take my money off the table at this point. And we make that an election for the LPs at the time of return of capital. And the reality is that sometimes we won't have a company that we can invest in, and we might just put that in an opportunity zone property, which would be real estate, right? And that's why we want to allow the individuals the opportunity to be able to return their capital if they view this predominantly as a venture capital type of investment. Good.
I think that helped clarify a lot of people's questions there. That's great. So a lot of flexibility you're offering there. I wanted to share the results of our last poll question here. So we hadn't had, in the first poll question, we hadn't actually had a lot of people who had invested in an opportunity zone fund yet, but it looks like more than 2/3 of our participants here today are planning on making some sort of OZ investment within the next 6 months, which is terrific. Next question here is from Steve. He wants to know, would Hall Labs potentially be interested in a testing lab or equipment leasing in the CBD and MRB space? Any thoughts there?
So the lab is one thing. I think Hall Opportunity Fund's another one. The fund itself and Hall Venture Partners is looking at companies that would really fit within the paradigm of opportunity zone investments, business investments. Hall Labs is usually up for about anything. I'd say that probably about 70% of our ideas actually come internal, where we say that here's a big problem and how do we solve that? And we apply engineering skills to that. And then 30% are kind of external ideas. We typically like to deal with companies or individuals that are uncomplicated and that can kind of fit the same mindset, which is oftentimes difficult because it's your contrary. Hall Labs is contra business school.
Yeah.
It's meant to be like that so they can innovate.
Hey, Matt or Dave, maybe since you have 3 targeted for the rest of the year that you'd like to close on, whether they're incubated or they're outside, what's your criteria? What is the criteria, whether it be real estate or social operating business, AI orientated? If you could maybe walk us through it real quick. How did you pick them, so to speak?
On the fund side, it's only going to deploy capital into businesses to begin with. We would only deploy capital in real estate if we received a return of capital from the exit of one of our companies, and we need to put money into an opportunity zone asset. But the companies that we're targeting obviously have to be opportunity zone businesses. They have to be commercial or starting commercialization within the next 6 months. They have to have an independent team, have to have strong leadership, and they have to have a pathway to a large exit. Hall Labs looks at exits that are $100 million plus on their end, right, which is the early stage development. But these are really potential $1 billion plus companies that we invest our capital into. And the reason there is that not necessarily trying to pick our winners, it's just that we know that typically companies require more capital than what you think they need. And attacking big problems typically allow enough headroom there to be able to realize good gains.
Great.
Excellent. Thanks.
Got time for a couple more questions here, I think. Bob asks about job creation. He wants to know, how many employees do you have on your campus currently, and how many are expected in the coming years?
Yeah, so right now there's around 300 employees that we have between Hall Labs and the portfolio companies of the fund. That's grown from about 100 about 3 years ago. And so we've grown quite a bit just over the past little while. This isn't including our past exits that obviously there's more employees there. But we're going to see quite a bit of growth for employee base, probably into the thousands within the next 5 to 6 years. A lot of those will be associated with manufacturing jobs for Vanderhals. They're currently on the phase 2 of their next building, which would be about 1 million square feet overall when it's all said and done in the next 4 years. And they'll be pumping out about 30,000 vehicles a year from this campus.
Very impressive. That's quite a bit of job growth.
How much of that do you propose as electric, Matt? I can't resist asking that. How much growth there?
On the pathway to full electrification right now. So they already have an electric that's on the market being sold. And then they'll transition to full electric, both within the current product line as well as future different verticals, over the next 5 years or so.
Thanks.
Great. Well, we are at the top of the hour, so I just wanted to let everyone know that we're at the top of the hour. I think we are going to continue answering a couple more questions, though, Matt and Dave, if you have time to stick around. Sure. Is that all right?
Happy to help.
Okay, great. But we are at the top of the hour, so if you have to drop off, we won't hold it against you. But next question here from Terrence. What is the minimum investment for the fund?
Yeah, so the minimum investment that we have set out within the fund is $1 million. So that we have that set up within the partnership agreement. We've accepted some funds that are less than that, but that's where we like to start. And the main reason is because we love investors, but dealing with too many investors and having to do that much work creates, its own set of problems.
Well, and as Matt highlighted earlier, especially within OZ, we want to be able to offer solutions that are tailored towards the individual LPs, whether that's, on the exiting side. It's not a one size fits all. There are timelines that we have to meet, both on taking in that capital, as well as exiting that capital. So we want to ensure that we have the capacity to handle everyone.
Great. No, that makes sense. Some other practical questions about the fund, kind of following up on that previous question. How big is the fund currently? How much are you looking to raise? How many investors do you currently have? What are some targets for you for the fund, if you don't mind sharing?
Yeah, so overall there's around 10 investors. The fund size is around 15 million right now. And then we target by the end of the year, probably another 35 million. We originally anticipated about 100 million. But with COVID, that's been an interesting situation, I guess, to be able to undertake. So probably since March or so, we decreased the overall trajectory down to about $50 million overall fund size.
That's good.
And that'll be the close of Fund 1, so we can kind of continue to meet the criteria. And then, the opening of Fund 2 on the heels of that. So that's kind of the plan.
Right. No, that makes sense. Another question just came in. The real estate you're discussing here for your fund, is that only on the Provo land, or are you potentially going to expand to opportunity zones throughout the United States?
Yeah, so overall, if we look at the fund, it's purely based off of businesses. If we do receive a return of capital, we'll have a decision to make of whether we want to put that into a business. That would be a qualified opportunity zone business or real estate. And we'd be agnostic when it comes to that point as far as what location it's at, because we're really just trying to place capital in something that we view could have some good appreciative value for the LPs, to make sure that they can get their capital back on a tax-free basis as far as the growth goes.
Yep, makes sense. I got a question here from Mark. He wants to know, what is the status of bills in Congress to, one, extend the end date from December 31, 2026 to, he suggests, December 31, 2030, and two, to expand the current number of qualified opportunity zones and create new qualified opportunity zones to add to the current list. And I have some thoughts that I'll share, and then Matt, Dave, Ashley, Will, if you have additional thoughts, please feel free to chime in. I do know that I actually just spoke with Senator Scott's legislative assistant earlier today. Our podcast episode is going live tomorrow morning on the Opportunity Zones podcast. And there's a question that I asked her, and they are working on extending the Opportunity Zone end date from 2026. She wants to extend it 2 years to the end of 2028. She thinks there would be bipartisan support for that. It's just a matter of actually getting it into a bill and pushing it through Congress. And she's not sure if that's going to happen before the election or not. It might be something that gets tabled to next year, but she thinks there would be bipartisan support for that, especially in the wake of the pandemic and the crisis that we're facing now, and some of the relief that's been issued due to COVID-19. And then his second question was about expanding opportunity zones, adding to the list. That's something that's also been discussed and is being worked on by the Opportunity Funds Association, Trade Association in Washington, which is headed up by Senator Scott's former tax policy advisor, Shay Hawkins. And I know Senator Scott's office has discussed something similar. I don't know if that is as urgent as extending that deadline or not, but I do know that there are members of Congress and Senate in particular that are working on both those issues. And I'm hopeful that something does happen here within the next year or so to push back the deadline, because I think that would be a great help to the marketplace, especially in response to the COVID-19 crisis. I don't know, Matt or Dave, if you've heard anything, if you have any thoughts on that.
We've heard similar, and I would say, part of the challenges with, any sort of new investment vehicle is that there takes a period of time for market adoption. And so that's a piece of it, but then it really wasn't until March of this year that the federal government had, full clarity on, how this was going to be executed. So, a lot of investors wanted to wait until all of those regs came out before they felt comfortable making that decision. So I think it would be wise to do that, because now that everyone's had an opportunity to digest, even through the pandemic, there's been a number of significant changes to the incentive structure to the benefit of the LPs. So we're hearing very, very similar things, Jimmy.
I think that in order to get it through, that you're probably going to be looking at some guardrails that the Democrats would want to put on there, namely in the form of job creation and some other kind of social impact measurable attributes, and all of which you guys are already doing. So it should actually kind of be welcome for you. And accordingly, should probably drive some funds that might go into other projects that don't necessarily have those attributes into your deal. So, I don't necessarily see that coming as a bad thing, but I think that that's probably what's going to come along with any kind of an extension or other kind of modification to it.
Good. We'll just do a couple more questions here. We're already 7 minutes past. I really appreciate your time, guys. Just a couple more questions here that have come in. Ted wants to know, do you guys accept investments from club feeder funds?
Yeah, we do. I think that you would avoid some of the benefits of Opportunity Zone investment. So this is set up as an Opportunity Zone fund. If you look at the investor has to be the one typically who realizes the capital gain in order to make that investment into the fund in order to defer it. And so I think you just run into some complications from the realizations of tax from that particular investor.
Unless it was a partnership, Matt, right?
Even then, it's going to look at probably the investor. So those gains will then go back to it all depends on who's experiencing the gains, I guess is how I'm going to put it.
Yeah, Ashley, do you have any thoughts on that?
Yeah. So Matt, are you accepting investments from other established QOFs?
Yes, we are, but those are going directly into the businesses as kind of a co-invest. So we have the Opportunity Zone fund investment, and then the fund itself co-invests alongside other investors, and that helps set up the valuation for the company.
Yep. And so I guess theoretically what could happen is if he's got, a club feeder fund that is an established fund with a significant amount of capital in it, that you guys would probably entertain maybe taking it at the QOZB level.
Correct. Yep.
That's correct. And we have a number of companies that we're taking in capital at the direct investment level right now.
So for example, we did do that on Bacon, where we had an investor that did a direct investment into the company itself from a qualified opportunity fund, and then he also individually made an individual investment into the fund.
And Ted did just clarify, he's the one who asked this question. He said that the feeders in his case are structured as LLCs.
Okay.
We'll get one more question here from Jake. He wants to know, is there an extension to the 31-month deadline for funds to deploy capital due to COVID-19? I do believe that was included as one of the notices that came out earlier this year. Dave and Matt, I don't know if you're taking advantage of that. Ashley, I know you know quite a bit about that, if you want to chime in as well.
Yeah, it extended any deadline from that would fell between April 1st and December 31st to the December 31st deadline. It also provided up to 24 months extension on a working capital business plan for any negative COVID effects. Now, it's not clear as to whether that's an automatic 24-month extension. If you were in a working capital business plan, I think you probably need to demonstrate some kind of adverse effect from COVID, but yeah, they provided for up to 24 months extension on it.
Okay, well, Will, Ashley, any other questions for our expert guests here today? Otherwise, we might cut them loose and let everybody get out of here.
Yeah, thanks, guys.
Yeah, I just want to thank both Matt and Dave and for their time. And, you know, here at Crowdcreate, they've been incredibly generous and transparent to work with. I can't wait for everybody to see some of the material that they have and some of the video stuff we're getting ready to put out, and you know, just thank them both. So can't wait for everybody to see what's coming next from Hall Labs and also from OZ Pros and Crowdcreate.
I can't wait for my 3-wheel off-road motorcycle.
I need the medic. I'm at the age now where I'm really in tune with what Matt said on the medic.
Well, there's some early stage stuff too that's really interesting. So you know, you can follow it on halllabs.com. That's 3 L's, or hallvp.com, and see some of the projects that we're working on in more detail. But you know, Jimmy, Ashley, Will, you know, thank you, and thank everyone that attended today. It's we're thrilled to have the opportunity to introduce you.
Great.
All right, guys, thank you so much. Thank you to Will Walker for co-hosting with me, Ashley Tison for chiming in a couple times here with some answers to some legal questions, and of course our guests from Hall Labs today, Matt Van Dyke and David Kunz. Be sure to check your email. Tomorrow we're going to email you a whole lot of good stuff. Like I said, it's going to be like Christmas tomorrow afternoon when we get that email out to you guys with a lot of different video links, and we'll of course be sure to include the link to the video recording for this very webinar. All right. Thank you again to all of our panelists and attendees. See you guys next time. Thank you.
Take care.
Thanks, guys.
See you guys.
Yeah, thanks, guys.